Let's go over the very first example of a conditional loan approval. So all the way on the top, you're going to see that it says loan approval conditions. And then below that, it'll have the lender's name. It'll have the mortgage company. If there's a mortgage company, it'll have their contact person, the email address, phone number, and the date in which it was issued. Over on the right, it should include the contact information for the underwriter or the team of underwriters, as well as your account executive and the closer. Going further down, you're going to have the loan information. This is very important. You need to make sure that the borrower's name is spelled correctly, that the property address is correct. Then, going a little bit further down, we're going to see transaction type. It says refi, cash out, other. So in this case, the borrower is taking cash out of their home and they're refinancing their home, either to lower their interest rate or to pay off debts. Below that, it says property type, planned unit development, which is also known as PUD. And all that basically means is that this is a single family residence that does have a homeowners association payment. So they do make homeowners association payments, which are also called HOA dues or HOA fees. Below that, we have the loan amount. First of all, it'll have the base and then the total. So the base loan amount is $273,000 and the total loan amount is $273,000 as well. Sometimes when it's an FHA loan, you'll see a higher amount for the second amount on the right. The appraised value is $379,000. The loan to value is 72.032%. The LTV will have a direct effect on the interest rate that the borrower has. So this is an important number. Below that, we have the note rate or the interest rate. So this is the borrower's interest rate, not the APR or annual percentage rate. This is the actual rate that the borrower is going to pay for the 30 years in which the borrower is financing the loan. So in this case, this is 2.695%. The housing ratio is 45.69%, and the debt ratio is 50.85%. So as you can see, this is just over 50%. So you have to see what type of loan program this is. Normally on FHA loans, it can't be over 50%. And we're going to see what type of loan program this is in just a minute. But if it's a conventional loan, it should be under 45%. So we're going to see exactly what the conditions are on this loan, because we need to make sure this is under 50% or under 45% depending on the loan program. Besides that, the maximum PITI or principal, interest, taxes, and insurance payment the borrower can have is $1,547.05. So if the payment is higher than this, then the borrower won't qualify anymore for the loan. Escrows. Under escrows, it says no waiver. So the borrower is not waiving escrows. So the borrower is going to have the lender collect the taxes and insurance in the mortgage payment, and the lender is going to be in charge of making those payments. So the borrower won't have to worry about making their property tax payments or their homeowner's insurance payments. This will be done directly through the lender. Non-borrowing individual. No, let's go over to the right. AUS. So desktop underwriter, or DU, was the AUS or automated underwriting system that was used to determine if the borrower qualifies for this loan or qualified for this loan or not. FICO. The borrower has a 783 middle credit score, and that's what FICO basically means. Term, 360 months, which is 30-year mortgage. Compensation type, borrower paid. So the borrower is paying the loan originator for their compensation. E-sign. So the borrower did e-sign the documents instead of physically signing the documents, and it includes the original state and federal documents. Verified income. So right now the borrower's income is $3,499.42, and it has been verified. All the way on the top, we're going to see the occupancy. So in this case, this is a primary residence, which means that the borrower is going to live in the home. It doesn't say second home or investment home. So occupancy, primary residence. The loan program, this is a conventional 30-year fixed mortgage. Status, it's approved with conditions, and it has the date in which it was approved. Over on the right, it says submission date, the date in which it was submitted. Must fund by. This is the date in which the loan has already closed, and then 3 days need to pass on a refi so that the borrower can decide to either cancel the loan or not between those 3 days, and after those 3 days, the loan will be funded. Must not close before. Now, this is the date in which the loan cannot close before that specific date. Rate lock expiration. So you're going to be able to see a date here in which the interest rate lock will expire. So it must close before then, or the interest rate lock will need to be extended. Max funds to close, $3,613.77 are the maximum funds the borrower will need to be able to close. Verified assets. So in this case, the lender has verified $21,245.98 and maximum cash back. It says not applicable. There is no max cash back here. Payoff to close. So the borrower can have specific liabilities that will need to be paid off and will be disclosed in this area here. When it's a cash out, if the borrower has chosen to pay off debts, then it'll be automatically considered a cash out refi even if they don't receive any cash at closing.